Hi, my name is David Bradley. I'm a CPA in Dallas, Texas, and I am the IRS doctor. 95% of my practice is dealing with people with IRS issues, individuals, businesses that have immediate action that's needed to handle them. And two of the big issues that we run into when we get a new client are bank levies and wage garnishments or wage levies. So the IRS is usually, when it gets to that point, that means that the individual taxpayer or the company has not responded to the IRS in an appropriate manner. Maybe they've not even responded at all, or they've not done what they said they were going to do. So the IRS has no other choice but to go in and levy bank accounts and their wages. So when somebody comes to us and we have a wage garnishment, to me, that is like DEFCON 5. So we need to immediately figure out what we need to do to get that wage levy lifted. And there's a certain IRS code that we'll talk about here in a couple of minutes that addresses those 5 areas in which a levy release is warranted and what those are specifically. So are you the beneficiary of a bank levy or a wage garnishment? Well, wage garnishment is an ongoing thing. It's happening ongoing. They're going to take each and every paycheck that you receive ongoing until the employer has been notified by the IRS to stop sending that to the IRS. So whereas a bank levy is a one-time event. So you say you had $100 in your account on Thursday and there's a bank levy that hit that Thursday. Well, they can only secure that $100. The bank has to hold it for 21 days. And the reason why the bank has to hold it for 21 days, it gives you the ability to go and dispute that and see if we can get that reversed. So there is a rule. It's not like the bank takes it and shuts your account down. They charge you a fee. The banks charge a fee for the bank levies. And I've seen them $250 to $350 from the bank for these bank levies. But if your paycheck went in the following Friday, the next day, the IRS is not entitled to that money. So a bank levy is a per day levy. Just that for that day it lands, that's the only time they're allowed to take whatever balance is in there up to the amount of the levy. Whereas if you put money in the next day, they are not entitled to that money. So there's a positive in that regard. It's not like it takes control of your whole checking or savings account. It's just for that day, but they can reissue another levy and go back in and dip in again for that next day or another day. They're not going to do it the next day, but you'll definitely understand that. So it doesn't shut your account down. It doesn't stop you from making additional deposits after that specific day that the levy has been received by the bank. So that's important. So let's look at IRS Code 6343, and it has 5 areas in which a levy is to be lifted. The first is you've already paid the tax. Maybe you've already paid it and it's an erroneous levy. Well, that is grounds under IRS Code Section 6343 for that, or the statute of limitations has expired on that debt, meaning IRS has 10 years in which to collect, and if they've surpassed that 10-year statute and they're still trying to dip into an account, that is grounds for them to reverse whatever levies that they've secured on your accounts. The second, this will facilitate the release of the levy, will facilitate collections. Give you an example of that. Let's say you're a business owner and you owe money. Well, what happens is the IRS looks at all the 1099s that you've been issued over the past multitude of years, and they will send a letter along with all the information on how much money you owe to the IRS to all of your past customers that issued you a 1099, telling them that if they owe money to you, that they need to send it to the IRS instead. So basically what that does is kills your business, because they will send that out, and I've had clients, and after they get to me, it's already gotten to that point. It's too late. They've already sent it out, and they're already losing customers. Or if they send a wage levy to an employer, there are employers that have it written in their employment contract, if you were subject to a wage levy, that you will be terminated from employment. That is a reason not to do a wage levy or a levy to send out to customers because it could kill your business or it could stop you from being able to earn a living. So those are very important things there. Or you've already entered into an installment agreement. So if you've already entered into an installment agreement and they still issue these levies, and that happens in a lot of cases where it's not done correctly and they don't code it correctly and include everything into the agreement. I just had one of these situations happen in this past week. And basically what happens is I received a letter saying that the installment agreement that I set up for the taxpayer about a month ago was going to be intent to terminate. They call it an intent to terminate installment agreement. So I reached out to the IRS to find out what was going on. I was assuming maybe that the taxpayer, my client, had not made the first payment. This was not very far into the agreement. But it was a mistake on the part of the IRS. They did not include the 2012, this goes back pretty far, year in the initial installment agreement. So that was their fault that they did not code it correctly. So it does happen. So you got to make sure that you're on top of that. I was able to fix that, but we watch our clients and monitor our clients ongoing. So we see that if there's anything that pops up. The client, when I called him, he said, yeah, I was getting those letters, but I was putting them in the drawer because I thought you had everything under control. Well, I did have everything under control. The IRS didn't. So I was able to circumvent that before a wage levy down the road came into play again. So, or the levy may create an economic hardship, meaning you can't feed yourself, you can't eat. Again, we go back to the wage levy. You know what a wage levy is? It's 90% of your paycheck. That's basically what it is. So if you can live on 10% of your paycheck, then you probably don't have an economic hardship. But I actually had a conversation with the IRS on a new client that had a wage levy. Okay, and the gentleman said, look, he says, are we talking about hardship here? Is this a hardship? And I said, I cannot believe that you would ask me that question. I said, let me ask you a question. If someone took 90% of your paycheck, would you be under economic hardship? He did not answer me, and then he actually helped me resolve the matter very quickly. When I'm seeing a wage garnishment and somebody's losing their paycheck, I am in DEFCON 5 and I have an immediate urgency to get that lifted, okay? Because I'm not about to have somebody starve to death just over some money that's owed to the IRS. All that the wage levies and bank levies are doing is causing the taxpayer to come to the surface. That's what it's intended to do. It does a very good job at it, but I always tell the IRS that, look, you're a football player and my client is a toddler and you have your foot on their neck. Is that a fair fight? So it's intended to be temporary, and we intend it to be temporary, and so we can get that lifted. You can't get a wage levy lifted until you're compliant. If you have back tax returns that haven't been filed, we are going to get those things done in like 2 or 3 days, so we can fax them. I can fax them to collection and get that wage levy lifted by incorporating an installment agreement into the equation. Okay, so we know what we need to do to get that thing done and do it within the rules that the IRS proposes. Seizures, like a property seizure, that's a whole different area. We won't get into detail in this video. But if the property, if the say they owe $10,000 and they seize a house worth $100,000, well, that's excessive. So they're going to possibly release that so we can get the property sold standard, or do a cash out on the property to pay that off. But don't take possession of a property that's in excess of what's owed in a substantial manner. So a 668D, it's a form 668D. That is a release of levy. That's what you're looking for. So this is what I do. I'm going in and I'm going to get all the tax returns completed. I'm going to get collections on the phone and I'm going to fax everything to them. But in the meantime, I'm going to have the phone number, the name, phone number, and fax number of the HR, the person in HR that needs to receive this release of levy. Because I'm going to get them to fax it while I'm on the phone, okay? because I need that thing done expeditiously. I had one gentleman that came in and he called me, said he just got called into HR. He had to fill out some paperwork the IRS sent over. He called me within a week. I had it lifted. He never missed one paycheck. It can be done if it's done quickly. If you get one of those, you need to work quickly. And most likely you're not going to do it on your own, because if you could do it on your own, you'd have done it by now. So you need to call a professional such as us or someone else that knows what they're doing, that specializes in this. This is not for an amateur to jump on. And 95% of all CPAs do not do this type of work. They do not do it. So don't think your CPA is going to know everything and be able to know how to get things done quickly. So 5% of CPAs do this, and I'm one of them. Okay? So if they don't want to release the levy, so what if they don't want to release it after you've gone in there and provided this information? Then you can, what's called a CAP hearing, you can get a collection appeal process going and try to get somebody that's in authority to help you get that levy released. If you have everything in there, you get an installment agreement or show you can't pay or you have economic hardship, they're going to release that wage levy. You have to act quickly and decisively. This is no time to play around. They are steamrolling you all day long and on Sunday, and they're going to go all the way to the wall, and they will take every bit of your check. I just got done negotiating on someone that owed a couple $1 million that hadn't had a paycheck in 10 months. He stayed at that employer, continued. They left out of a $100,000 a year salary. He was getting about $900 a month. That's all they were giving him. And he lived on, and then he started borrowing people. He just didn't take care of what needed to be taken care of. When he hired me, I fixed it all, and he was able to get his paycheck back. And amazing. It's just, but again, you have to take action. Not being decisive and taking action is going to hurt you in the long run. So if you owe $10,000 or more and you need help, if you want to do it yourself, go run and do it. It's there. You can do it yourself. I'm not telling you can't do it yourself, but it is so much more empowering when you have somebody handling it that knows what they're doing. We're going to get it done so much quicker, and we're going to make sure that you get your paycheck back. Because the way I look at it, if you start losing paychecks, our fee has already been paid for by them taking the money out of your paychecks, and we could have stopped that from happening and put you on a level playing field right off the bat. Give our office a call at 833, that's 1-833-921-9977, 1-833-921-9977, or go to our website at myirsdoctor.com, that's myirsdoctor.com, and schedule a 30-minute free consultation. We will empower you with information. We have a sense of urgency on every file, and we will get the job done. If you found this video helpful, we'd love for you to like the video and subscribe to our channel. We are committed to providing weekly content on IRS tax resolution, because this is an area that most people have no knowledge of and they feel helpless. We're here to help. Give our office a call. Talk to you soon.